right. I'm gonna make sure this. I just want to make sure this start is working. Um, all right, sounds good. So, everyone, welcome back to this week's live stream. We got a lot to unpack. There's a lot to unpack, but this week we're gonna. I think it's gonna be a bit of a different topic. Um, I think this week there's a few interesting things I thought we'd play it by ear. There's a few interesting things I want to talk about, but I thought we'd play it by ear. For starters, there's been a lot of, for starters, there's been a lot of talk about. This is a bit of a new topic, but there's been a bit of a. I heard a discussion on the radio earlier, so I thought it would be interesting to talk about um, the impact of tariffs on the Canadian beef industry. But then there's a few interesting things at play, and I think it's mainly between kind of like the East and the West. Um, how I think how dynamics is there going to be a new center of gravity in terms of um, economic leadership globally? Um, I'm not saying it's a new world order, but I just something there like for example, Saudi Arabia, UAE are GCC states becoming more dominant in the global stage. So that's just an interesting thing to consider. So yeah, I wanted to kind of highlight that. So I thought we'd start by well, first of all, before we start, I'll kind of show like for those of you still not sure, just want to kind of give like a preview of for those of you that are watching this or follow are on the channel and that are not necessarily following my newsletter, just to kind of show you the weekly commodity pulse. Here, you can enter your email there. Um, but basically, I post here twice a week. As you can see, this is I'll usually do this is the Monday edition. And then if you'll start free trial, I guess I can go. I'll enter Ben. I'll try my email. I'm already select, continue, maybe later. So if you scroll down, claim my free post. I can go back, Benjamin Kirsch. I'll have to go to my email. But anyways, I won't go to my email. Basically, it's a long basically I post twice a week. I was just trying. So if you're interested, you can follow. This week's topic was on OPEC and IEA. They have divergent forecasts. And then I was kind of talking about. Then I talked a bit about the Chinese economy, and some interesting topics. Um, for those of you interested, basically we cover global commodities. We cover macroeconomics. We cover trade. Geopolitics is a big thing we discuss. For those of you that have been following me for a while, like read my articles and watch my YouTube, watch my videos. My big thing is I'm a big pusher of how I believe that policy, geopolitics, macro have bigger impacts on commodities um, than most people would think. They're major. That's a pretty common thing. Blanket statement to make, but that's why I place a lot of my fundamental analysis and on whether or not um, I believe where I think something's going based on I believe that following these types of dynamics and having a good read on these dynamics is key to understanding the commodity markets. And then on Fridays we also have our Friday edition where it's usually usually just two shorter, and then we have like a 31 day outlook. Um, Here, let me see if I can pull open. Awesome. Here, here I'm actually signed into my account, so I'll show you. I'm signed into my actual account. So I'll show you if we just were to click here, just to show you guys what's going on here. Yeah, so you see, this is a bit of a shorter week, but there's usually a sector sentiment and supply chain pulse. It's a bit shorter. That was a bit shorter this week, but usually we usually have some more regional analysis here. I'll show you like last week's Monday edition. Like last week's Monday edition was a bit more in depth. Yeah, we usually just go into some more details. If you're interested, then on Fridays we usually have um, a bit shorter, but then we have like top 31 day movers. We'll go into some analysis and and we'll do some technical analysis. And I'll usually give like a short term outlook on where I think the markets are going. Um, if you're interested, just you can always, again, you can sign up. Um, it's free. We have a free edition, and then the premium edition. Obviously, you get more in depth. So you get like analysis, forecasts, CFTC, short-term outlook, um, just more in-depth analysis. Um, so yeah, and then of course we obviously have our Commodity Bro podcast, which I'm still behind on. It's just been on my end. It's been very busy, but I have some stuff in the oven for that. But yeah, anyways, let's dive in. So I mean, this one was more, I guess, I'll Google, I remember, like, I was listening to the radio, or, like, an hour ago, I was in the car, and I was listening to the radio. um, there was something interesting. So, there's been a push for Australian import on beef into Canada, uh, and what I thought was interesting about bringing that up was because, Canadian beef supply here. Let me try and find, um, where is it? What's the name of it? Fred API. Here. I'm trying to find it. There was a chart. But so there's been a bit of a shortage on Canadian beef supply, uh, and that's been also pushing up the price of beef in Canada. From we're talking about on just on the radio, but then they had mentioned more. They had mentioned essentially that a lot of the so there's been a kind of a shift because of tariffs. So a lot of so it's because of tariffs. It's actually become, it used to be cheaper prior to tariffs, or roughly the same price, or cheaper to just import from the U.S. But then we had a brief issue. Then I mean, now with the tariffs and everything, so they were saying, it's interesting. They were saying that Australia. So it's become more, or sorry, New Zealand or Australia. I can't. It was I'm sorry, it was Australia. They had mentioned that it's the big exporter, importer of beef. We're importing a lot of beef from, which is interesting because you would think that, and one of the arguments he was making about why he thinks the price of beef we likely might see a bit of easing on the price of beef in Canada is if and his logic was that if the if it's I mean, right now there's a supply shortage in Canadian beef, so the prices are going up, overall. But if demand drops for Canadian beef, then it could reduce some of that upward pressure. So because the demand for it's going to go down, so the price is going to go down theoretically. So I mean, it just means the price for Australian beef is going to go up, but again, it's still cheaper than importing from the U.S. Uh, so that was just kind of a food for thought, pun intended, no pun intended. But I just wanted to kind of drill that in. I was kind of curious to I thought we'd do, like, this, being that this is an unscripted kind of live analysis, about it'd be interesting to kind of research into that here. Let's go to Fred API, see if they have a data set on that. Where is it? Okay. They don't have it. So they mentioned a shortage of beef supply in Canada. So I'm curious. I was just wanted to see. I'm curious. Okay. So beef imports. So local production. I guess if this is correct, then I guess it is kind of it's decreased slightly. Um, it's like slaughtering. Yeah, and Alberta is the biggest. I don't know. It's interesting. It's kind of food for thought. For those of you interested, I won't dwell too much time on this. For those of you interested, it's a stats scan. You can just Google Canadian. There's an interactive dashboard. You can look at all the statistics. I just thought it was an interesting thing to look into. Um, yeah, and this is all publicly available. But the other thing I wanted to kind of talk about was, for those of you that followed, I talked about this in my newsletter, but um, both here and then here, I mentioned the UAE, Arabian, in this one, the UAE basically, um, the UAE is basically offered $70 billion investment in Canada, and I remember MBS, Mohammed bin Salman, he's the Crown Prince of Saudi Arabia, offered a $1 trillion in the US. And I know this, I mean, with the risk of kind of going back to what I've talked about before, but something that I was thinking about was this week as well was, and also based on a few conversations, was, there's been a lot of talk about where the US dollar, let's look at the US dollar, for example, the US dollar. Uh, oh, US. Okay, where if this is it. Like since the beginning of the year, I guess this kind of shows it, but since the beginning of the year, you've seen kind of a drop in a level off steady of the US dollar. Like inflation too is picked up. If you look at the CPI, um, it's been kind of a slow walk up. I believe it was the US CPI. Yeah, so it's been a slow walk up. This is obviously until September. I wonder when they're gonna November is when they update it next. I believe they update it quarterly, at the end of the quarter, but for before the new year. But yeah, so there's been more inflation, more like a drop in the US dollar, and then all of a sudden you see this influx of flow from the Saudi Arabians put again 1 trillion, 70 billion in the Canadian economy, and kind of asks them another question. There's been so much investment. You see all the AI infrastructure they're talking about. There's all this big talk about AI data centers, um, and I think there's been a bit of I mean, a lot of first of all, you can make the argument, though, they wouldn't invest in the West if they didn't see the benefit, they didn't see potential ROI. But I think there's something else at play here because I believe it was, what was it? BS talk with Russia. I saw a headline. Yeah, so yeah, shortly after, I believe it was shortly after. Oh, I saw a headline that more recently as well, so this is before, it looks like this is before the Trump talk, but there's also, I mean, sorry, this, it looks like this is before the most recent visit when he pledged the $1 trillion, but there was also more, but, again, I saw it, had seen the headline before, there was also another talk between them. But, I think there's more to it. On the one hand, they're looking at the West, but then on the other hand, they're looking at the East. And with the ongoing talk, I know that the Saudis are doing trade with not only the Americans, they're doing trade with China, they're doing trade with Russia. I mean, this might sound a bit high level, but my just kind of running my thoughts on this. I think there's going to be, I think we're seeing kind of a similar dynamic play out that we saw um, I mean, post World War II, in the U.S., the world was kind of looking to rebuild its infrastructure. You had a lot of these factories in Europe were destroyed in the war, so they went to the U.S., who basically loaned them all this money, invested all this money in the European economies, and we basically rebuilt them, Reconstruction era. And so there's a bit of an interesting dynamic at play here where um, there's a bit of an interesting dynamic at play here where essentially they're not like I think there's they I mean we're starting to see this shift play out where the Middle East is almost playing that role of a lender of last resort. They're almost playing that role of go and fund um, go and fund all these first, like Western countries, go and fund the West, go and fund the East. Um, and yeah, and at the end of the day, I think they're gonna come out. It's the same thing. Like they're gonna end up owning all this infrastructure. They're gonna end up heavily invested in all this infrastructure. And what's gonna happen is I think the West, we're gonna see more of an indebtedness to the Middle East. We're going to see a lot more of this. The more infrastructure. I mean, it's the same thing with the real estate crisis in Toronto, for example. I remember talking to someone. All those high-rise buildings. If you go outside the Union, the major train station in Toronto, downtown Toronto, all these. There was a massive real estate bubble, and there is a massive real estate bubble. Property prices are going. I was talking to someone last time, not too long ago. They're saying property prices have gone down simply because there's there's not like sorry, you have all these foreign investors come buying up these properties, um, and then raising the rent, and they're turning them into rental properties, raising the rent. And on average, talking to people in the real estate industry, they're saying like on average you could see rentals annually go up like 3 to 4%. If the price if the rental prices go up 3 to 4%, you know I just know people that are looking at rentals in Toronto, and they're saying it's like $6,000 to $7,000 a month just to get waterfront rental. The rent a tiny one bedroom bachelor pad in downtown Toronto, and so I'm digressing, but it jacks up the prices, and then the demand drops. So then the property values are actually going down. Or the property prices are going down because no one wants to pay the rent or the crazy prices it does just buy the property. And I think we're going to see a lot of the same thing here. Where they're investing they're throwing all this money at our infrastructure. But what's going to happen is we're not going to own our own infrastructure, so there's less control there's just less control over how it operates, what it produces. Uh, yeah, and I mean the more dangerous thing is our data centers and anything in our energy sector too. If we don't own our energy and we don't own our data, then I mean in the new information age, that's we've kind of sold ourselves out. So I mean I'm not against foreign investment. I think there's some benefits, but I think there should be I think there should be a little more clear cut um, policy. Or I don't think we need too much more red tape. I think there's a difference between red tape and policy, but we need more regulation around allowing around how much around how we allow our I mean, how we allow our investments to flow. I mean I mean, if you look at it from a I mean, from the perspective of we already tell investors who they can take. We tell wealth managers who they can take money from. We tell people how much they can or can take out of the bank or banks already tell people how much they can or can't take out of their own bank account. So it begs the question, like we're ready to we will heavily regulate our own citizens from investing, but we won't or from taking money to invest, but we won't. It seems that there's fewer rules the higher up you go. I think that's something, just food for thought on that. Just something I was thinking about. I mean, the other thing I was going to talk about was just a conversation I had the other day about the reserve ratio, the reserve requirement. So for those of you who don't know, the reserve requirement. So amount of cash your banks must hold in reserve, and basically historically there's been as a percentage. So for example, for a reserve, so basically a reserve ratio, for example, is a reserve requirement is the amount that they have the amount of cash they have to hold. So as a percentage, it's usually as a percentage of bank deposits. So for example, 10% would be 10% of bank deposits. So a million bank deposits, that's 10% of a million, 100,000, I believe. One, yeah, yeah, 100,000. So 10% of a million is 100,000. So it'll be 100,000. So so what's interesting about that is, in Canada, um, U.S. In the U.S., for example, it's 0%. Canada, I don't believe we have since the 1980s. Canada reserve requirement. Yeah, it does not have, which mandates the minimum amount of cash. So instead, central banks are regulated by other requirements such as. So we have other things in place. Um, sorry, not since the 90s. So I mean, there's other. I would actually might go into more into detail on this. But I just kind of high level I was thinking about was like if I take the U.S. for example, and Canada having no reserve requirement and having a lot more and I mean a lot of this is more lax. I mean the whole point of bringing this up is because I was having this conversation with this person, and they were talking about how, when you go to a bank, and he pointed out, when you go to a bank, and I believe in Canada, I don't know how much wherever you're watching from, I'm not sure what it is there, but I know in Canada, for example, banks will flag you if you take over $10,000 out of your checking account at once, and I mean, I understand why there's money laundering. They want to know where the money's. They want to control, like, to make sure there's no illegal activity, and that's a fairly valid reason to regulate that. But then when you start getting into this down the rabbit hole of and I mean he was talking about it in the terms of crypto, but and I mean this might be controversial. So I'll pose it as kind of the thought that he mentioned and not let you, the viewer, decide what you think on this. So I won't get too controversial, but I think it's interesting how he pointed out how, since they started regulating crypto, and again, I know why, because of illegal activities and all this stuff. And I remember hearing the Coinbase in Coin, and I'm seeing statistics from saying that's up to 60% down to like 2% transactions um, on the blockchain are laundering or are illegal activities. So fine, that's why you want to regulate it to make it more legitimate. But I think what gets interesting is when you start dealing with um, I guess someone could look at this on the flip side and say, well, if it's there's a diff I mean, if the money's recorded in the system, so like when you put money into a bank, you pull it out. I guess you're pulling it out of the system, there's some form of there's some record of that transaction. So I'll admit I'm not an expert on the subject, but I'm not an expert on like the subject of like commercial banking. But just kind of food for thought was should like should like should you have full autonomy over how you work, how you deal with your own cash. And I mean where that comes from too is I mean they'll regulate, and again where that thought he was coming from was they'll regulate how much you can pull in and put in and out of your bank account at once without raising red flags and signing paperwork. But then they'll take your deposits and lend 100% of them out. That's what a 0% reserve requirement means. It means they can lend out 100% of 100% of your money, of your deposits. And and that raises another ethical thing too of if they don't want you pulling out a lot of too much money at once, they're going to lend 100% of your money out, there might be an element of they don't of they're trying to prevent their own liquidity drawdown on their own on their liquidity. So they'll regulate you in order to cover their own expenses. That's just I mean that's just a food for thought. But yeah. Anyways, anyways, if you like this content, I think that's it for tonight. If you like this content, don't forget to like, subscribe to the channel, and I'll update you when there's an update on the podcast. But again, don't forget to check out the weekly commodity pulse. It is free to sign up, and if you're interested in the full version, here we can go to about. Yeah, so you can read all about it. And yeah, anyways, hope you enjoyed this live stream.